Meanwhile, India's largest FMCG player, Hindustan Unilever, came out with its second quarter numbers that beat street estimates. While the company saw decent volumes growth in most of its categories, its margins seem to have come under pressure. Nikhil Namdar has this report.
It's been a muted quarter for India's largest FMCG goods company, HUL. While profit after tax was up 7% and sales grew at 11%, higher input costs, increased ad spends and a step up in innovation activity dented the company's operating margins, which declined by 170 basis points. But HUL saw significant traction in its food and personal products businesses, seeing 13% and 15% growth respectively. In fact, the company expects significant growth coming in from the personal care category as well as other emerging segments in the near future.
There will be some parts of the portfolio which are likely to grow faster in the context of how we see this market emerge. Yeah? And that could be in the area of personal care, in the area of beauty, in the area of some new foods categories that we've entered ourselves, ice cream, loosely put things like personal products as we call it. More specifically, categories like skin, hand and body, hair, and of course the new emerging segments in foods that we are entering will grow faster.
Going forward, while good monsoons should help FMCG companies like HUL, higher input costs and the inability to completely pass them on to end consumers will remain a challenge, say analysts.
These days, the competition is making the FMCG companies stay awake at the nights and then figuring out how much they can pass on, because the cutthroat competition is led to a stage where the competitor is immediately standing to take your market share.
While volumes have grown this quarter, higher ad spends and rising input costs have taken a toll on HUL's operating margins. Going forward, the key thing to watch out for is which way raw material prices are headed and how the company responds to the increasing competition in the marketplace. In Mumbai, Nikhil Namdar for NDTV Profit.